This is a true story of how John and Sarah, both new immigrants, used this simple and effective method to buy 2 income-generating properties and move closer to their ultimate goal of financial freedom in Canada. Now, half knowledge is no knowledge, so make sure you watch till the end so you can have a well-rounded understanding of how to apply this principle to your own real estate journey. In exchange for this knowledge, please consider subscribing. We're trying to get to 1,000 subs and I really need your help. And if you need some time to do that, here's a quick intro and I'll see you on the flip side. So John and his wife moved to Canada in the middle of 2019 with about $50,000 in combined savings. They worked multiple jobs to gather enough money to put a 20% down payment on a brand new $500,000 home by the end of 2020. Now, even though they had gotten their first home, they continued working very hard to try and save up another $100,000 down payment to purchase a second property. It was going to take a really long time, but they were very committed. Financial independence for them was something that they really wanted to start building immediately. So they could have time, time to do the things that they really wanted to do. Like actually have enough time to raise their kids. But after a year of working super hard, they were forced to take a long break for health reasons. They hadn't gotten very far with their savings goals because expenses in Canada, they joke, no lie. So they got thinking like there had to be a better way to get this down payment without sacrificing so much or even waiting so long. I mean, people seem to be buying multiple properties in a reasonable amount of time or on practically the same income. So they decided to do some digging and they found out about this realtor on YouTube talking about something called the cash out refinance. The cash out refinance method allows homeowners to get cash by tapping into the value appreciation of their property and then using that cash as a down payment on another property. Obviously, this was a bit confusing. They weren't very clear on what all that meant. So they booked a meeting with this realtor to get a better explanation on things. And I'm going to share with you this simplified breakdown of the cash out refinance method. So remember, John and Sarah purchased the home in 2020 for $500,000. They put 20% down or $100,000 of their own money. And they got a mortgage for the balance of $400,000 from a bank, meaning that they put 20% down and the bank brought in 80%. Now, John and Sarah were so hardworking, they didn't even notice that the value of their home had increased from $500,000 in 2020 to $900,000 by late 2021. And this increase, this appreciation represented the best and most effective opportunity to raise hundreds of thousands of dollars in down payment money for their second property in a matter of weeks instead of in a matter of years as they were originally planning. You see, their bank has a rule that says they can borrow up to 80% of the current value of their home and use that cash for basically anything that they wanted. Now in 2020, 80% of the value of their home was $400,000. And in 2021, 80% of the value of their home increased to $720,000. Now keep in mind, John and Sarah had already borrowed $400,000, which represented 80% of the value of their home in 2020. But now that 80% of the value of their home in 2021 was $720,000, the bank was essentially saying that they can borrow the balance of that money, which is $320,000. That's a lot of money. Of course, John and Sarah couldn't believe it, so they booked a meeting with their mortgage broker. They confirmed that information, immediately filled out the necessary paperwork, and before they knew it, $320,000 was made available to them just like that. And without any pause at all, John and Sarah immediately sat down with their new realtor to come up with a plan to purchase their second property. They wanted that property to be able to generate enough income to handle its own mortgage, running expenses, and other related costs of borrowing more money from the bank. It's a very smart move. The plan worked so well that not only did they have a second property that was basically paying its own mortgage and expenses, but even had enough left over every month to take care of some of the expenses of the house that they were living in, their own first home. Now, John and Sarah had only accessed $100,000 out of the possible $320,000 available to them, leaving $220,000 that they can still pull from to run more projects. And after speaking with a building contractor, John and Sarah decided to borrow an extra $50,000, which they used to turn the basement in their current home into a separate apartment. This separate apartment now generates even more rental income for them on a monthly basis. And now I'm welcoming John and Sarah to find their third income generating property in 2023. Now guys, I've used this method myself, and when done properly, it is the most powerful way for anyone to build solid generational wealth without having to stress so much. And now that you know about the cash out refinance method, you can use this knowledge to plot your journey in the Canadian real estate market even before you buy your first house. You can reach me right now on this number. I'm happy to help you on this very fulfilling journey while the opportunity lasts. And if you have any questions, please leave them in the comment section so that the community can also learn from your questions, the answers, and of course, your own experience. I've made an entire step-by-step playlist about how to buy a house in Canada, just in case you're not ready yet to explore this method and you're just trying to understand a few things better. And yeah, that's pretty much it for this video. Alright guys, don't forget to subscribe, and I'll see you in the next one. Bye bye.